All righty, traders, let's jump into our market wrap and trade recap for the day. It is Thursday, October 12th, 2023. Let's jump into the markets, and we'll start there, taking a look at what's going on in the market. So here's what we saw today. Markets had reports come out this morning and did not like them particularly. I mean, tried to pop up a little bit on the session and then just really tailed off. Showed inflation. CPI reports showed inflation is still on the attack, and week over or month over month and year over year, things don't look especially fantastic out there. So if the Fed's trying to get to 2% inflation, man, that is not going to be easy, and it's going to take some time. So that's what we saw in the markets today. Continuing to get some of that news. I think some things to look for tomorrow is we get bank earnings before the market opens. And man, I don't know how those bank earnings are going to go. I mean, we could get anything out there, but I think the one thing you have to be concerned about from a bank perspective is what do the treasuries that they've bought and they're holding, what's the value of those treasuries and how much has the value dropped on those bonds? Since bonds have just absolutely cratered, these banks are holding on to significant losses out there. So I think you have to be careful with it, but we're going to see Wells Fargo, JP Morgan. We're going to see what happens and what they're going to be saying and what they're going to look like when you've got rising rates, bad loans, bonds dropping. What kind of recipe for banks is that going to be? We're going to see a lot of that tomorrow. Mortgage rates hitting close to 8% in what they're calling an inventory crisis out there. So pretty tough for home buyers. I mean, I've got 2 kids in their 20s looking to really buy a home, and they got mortgage rates around 8% and home prices extraordinarily high, and there's nothing available. Man, nobody wants to get rid of their home and buy a new one because they've either had a loan that they took at 3-4%, 5%, I don't know. So they've got this nice 30-year loan that they've got that's 5% lower. Why would they sell this home even though it's worth more? Try to find another home, which is hard enough to do, and then they're going to double their mortgage from 3 to 7 or 8%. They're going to double the payments, and nobody wants to get rid of their home. So you got a real big housing crisis and an inventory crisis on hand. So we got to keep an eye on what happens. I think we get into earnings tomorrow. Some interesting things I think could really be happening out there in the market. So we'll take a look at those when we get to it. Let's just jump into the market itself today and see what happens. So for the week, we are still up on the week, but we are off of our highs. We tried to get into this gap zone that we had here. We tried it the other day, couldn't get through that gap. We tried it a bit yesterday, couldn't get through the gap. We jumped up into the gap today to the 50 moving average exponential, and we dropped all the way back down, but we did hold the 21 moving average. MACD is still rising. RSI, not quite so much. It backed off a bit on this drop today. And if we look at the weekly, it's been dropping. MACD, RSI has been dropping for weeks now. This week, we're getting a little bit of a bounce, but let's see how we end up tomorrow. We could, one bar is not going to make or break the chart. However, I really want to see some kind of continued movement higher here. If not, I really think we've got some more selling to go on SPY. If we look at the Qs and we look at tech stocks as a whole here, let's take a look at what's going on in tech stocks. And I think we can probably draw another trend line in here and see what do we have. We really don't have a really well-defined wedge at this point, but there's wedges everywhere. I think that's the theme of the charts right now is there's a wedge to be found a lot of different places. And if you take a look at this, you've got this essentially falling wedge, and we're at the top up. A break to the upside, I mean, could be a nice, really good bullish move. MACD moving higher. RSI is still above 50. The weekly doesn't look too bad either. You've got a PSR bearish move on the weekly here, but we're almost close to triggering a bullish reversal on the weekly that we've already been in on the daily. So overall, NASDAQ not looking too bad, and I think your Magnificent Seven are really just driving this market. The S&P not looking quite as good as the NASDAQ, which is nicely above its 21 and 50 moving averages, where we look at SPY and we're below the 50, and we're just barely holding on to the 21. Let's take a look at IWM. So if we take a look at IWM out there, here's what we're looking at. We just are bouncing around in this tight range on the weekly. It's been in a downtrend now since the end of July. And this has been a pretty nasty downtrend from about 200 down to about 170-ish. So about 15% drop in the IWM since that time. And if we're looking at the daily chart, I mean, MACD tried making that reversal, and now potentially today starting to flip over with RSI dropping as well. Back, it couldn't break the 50. We just could not get anything going on this. We essentially have another lower high and a lower low, and now a big drop today, 2.26 down on IWM. So really poor outlook today for IWM. This does not look healthy at all. All right, we're going to jump through a bunch of things here. Let's just take a quick look at VIX. VIX on the day rose just a fraction to 1669, still pretty inconsequential. Not really worried about the VIX. The dollar, though, on the session today. So the dollar did rise decently on the day. So I drew this uptrend line. I know there's a lot of lines on here, so I do apologize. It may be hard to see for everybody. But we've got this uptrend line that we broke, okay, the uptrend back here 3 days ago. Today, we came back up and just finished just over it. I mean, if this line is a little bit one way or the other, you moved higher. We closed at the highs of the day on the dollar. So a good move on the dollar overall, moved up 0.7%. So it was a decent up day. But you're right back to this uptrend line, which could flip as a line as well and become a resistance level. We'll see what happens. But overall, I think we get rid of some of these lines on here. It's getting pretty busy, and I don't think much of this is holding true anymore. So we'll see what happens and where we go on the dollar. But good update today on the dollar. TLT, on the other hand, just getting creamed today. I think all of the TLT bond bears or bond bulls that are out there thought they were vindicated, calling, oh, the lows are in, we're rocketing higher, big gap up yesterday. And then they all probably piled in at 88 and got smoked down to 86 today. So you lost almost 3% on the session on TLT. I'm pounding the table. I'm still telling you, this is not the time to buy TLT. Okay. Is it at a low? Could be. You got a bullish PSR signal. Okay, you got MACD moving higher. RSI trying to move higher until today, getting crushed. But the weekly is just in a horrendous downtrend and has not signaled it's reversing yet. So anything on the daily that's a bounce here is just a bounce in a downtrend. You couldn't even get to the 21 EMA, which continues to just fall. And look at the width of this 21 EMA from the 50. From here to here, what was this? This is sitting around 2 points, and now 92 to roughly 88. Now it's around 4 points. It has doubled the distance between the 21. So it's accelerating to the downside. Why on earth are people telling you to get long when the 21 is accelerating? It's doubled the distance between the 50 as it moves to the downside. Just be patient, folks. It'll be fine. You can get into TLT in a couple months or a month or something like that, and maybe you'll have some decent gains at the end of next year in it. I don't know why you're racing to buy a falling knife right now. All you're doing is getting cut to shreds on it. Stop the madness, people. Anyway, I'm just railing on that because there's just some people just driving me crazy on that. And I think there's nothing that gets me more than people wasting other people's money. And then here's the 10-year Treasury. So 10-year had a big rally day today. It's been moving down RSI and MACD have been dropping for sessions. And then today with all of this move and the CPI numbers coming out today, not a whole lot of good stuff that we saw. So nothing exciting going on out there, but I think you got to really be careful with what you're doing at this point. I think we are really in a precarious position. I posted that in the video from yesterday. I think you really have to take a look at what's going on in the markets, and I think you got to be a little bit careful because we are nowhere near the 2% inflation that the Fed wanted. Consumer prices rose in September. They rose more than expected out there. So I think that's not a healthy look. We were expecting I think the forecasts were 0.3, and we came up with a 0.4% increase up from 3.7% a year ago. So you're now at a much higher consumer price index. So CPI increasing 0.3% on the month and 4.1% on a 12-month basis. Pretty much in line with expectations, but that's still way away from the 2% goal of the Fed. So the fact that they're increasing, I don't care if you got the expectations right or not, the number is going up. And it's not falling to the rate that you want to see it at. So I think you got to be careful in these markets. And rates jumped higher today. We'll see where these rates are going to go overnight and open tomorrow. But overall, I just don't see it. I'm not seeing it. I'm not seeing a good atmosphere for bonds and so forth. So we had a pretty nasty day in the Aussie dollars, with the U.S. dollar cranking up like it did. In here, Aussie dollar got beat up pretty good, dropping heavily. British pound dropped heavily. Canadian dollar dropped heavily. And the euro dropped heavily. It tried to break out from this downtrending channel, and this channel just held tight in here. So we tried to break out yesterday. We were up just a little today, and then back into this downtrend channel on 6E. So just like TLT or any of those, then you got to be careful here. You can't get long the euro when the weekly chart is telling you we're in a downtrend. Everything's moving down. Just because you had some oversold readings and maybe MACD trying to make a reverse and then it flipped over today, all these are bumps in a downtrend. There's little market rallies or little, if you want to call it a bullish pullback in a bear trend. That's all you're seeing everywhere. So let's take a look at oil. Oil had another down day today. Pretty much what I had said was going to happen. That when we gapped up these 3+ points the other day, I said it was overdone. There was no reason for it. I get it. Israel going into Gaza, the attack on Israel by Hamas, Iran supposedly behind it, which I'm sure they are anyway, but everyone freaked out on oil. There's really no oil involved in this entire war happening right now. There's no oil in the Gaza Strip. Israel's not really an oil producer here. The only concern is, what will Iran do? Will they do something crazy, do something stupid out there that gets the U.S. involved? That could spike oil. So it's certainly in a precarious position, but overall, oil's in a downtrend on the weekly, and there's no reason to think that that's done. So I still think we, have going lower. How much lower from here? I don't know. Look at the tight triangle that we're in here. Overall, the downtrend much steeper than this uptrend piece. We're going to break one way or the other. This is tightly wound, and we're going to break one way or the other. MACD's saying potentially you're reversing higher. On the daily chart, RSI is basically doing nothing. It's not oversold. It's not moving above the 50. It's not moving seriously down from the 50. It's just stagnant right now. So oil, that's a good consolidation zone for it. But I really don't see, unless something happens that's war related here, there's not a catalyst to push us back into the upper 90s again for now. But I think there's some floors to be had below 80. Or around 80, upper 70s. So I think that's where I'm still looking for oil to go. not getting crazy on oil, but I am bullish on it overall. All right, let's take a look at gold. What did gold do today? It's having a decent week. It's trying to reverse this week. It is in a downtrend, but you've got this rally in a downtrend. What does that mean? It means nothing. It means you're rallying in a downtrend until this downtrend changes, like TLT, like oil, like all the other stuff that we've been talking about. Until the downtrend changes, this is simply just a bounce in a downtrend. It's simply going to be a higher low situation, which if you're going to get short, I think it's a good opportunity. I'm not getting short gold here. I like the floor that it was putting in around 1820 or so. I like that area. So I like the 1820, 1800 area for oil. That was definitely oversold. Look how oversold this was on the RSI to begin with. Very oversold, running higher. Couldn't break the 50. So the momentum, not quite there yet to get gold to move any higher. And even if it does move higher, you got to contest with all of this overhead. You got a 21 that we failed at 2 days in a row. You've got a 50 above that. You've got a 200 above that. So these are stacked to the downside. And you've got this downtrend line up here about 1939. So you've got to move 50 to 60 points higher just to get to the downtrend. And then let's see if it runs out of steam. I'm going to guess that if you start to look at this 3 ATR line, look at this thing dropping. Okay, so it dropped, in about a week or so, this 3 ATRs dropped almost 20 points, and it's already down 10 points this week. So if it's dropping 12 to 15 points in a week, it'll definitely get down to this area here. So if we continue to rally, we're going to run into that 3 ATR on the upside, which is going to cap it. And then I think we got another potentially lower leg to go. So I'd be very cautious on gold. We did play a trade in gold down here. And now we're back. We're out. We got a 50% winner in just a couple of days. We'll talk about that trade here. But I'm not going to play it now. I mean, it's made a run. Let's see this thing flip over, come back down. If it makes another lower low or comes close to this previous low, then I'm going to probably do it again. And I'm going to keep selling naked puts on gold on these drops and playing any rallies that come up. I'm going to do the same thing on oil when these things drop before they bounce. Here, I'm going to be doing the same thing. I'm going to be selling naked puts down in this area, waiting for a little bit of a bump, and then we'll get out. We'll do it again. So I think we've got some opportunities, and I'm also going to be doing the same thing on bonds, okay? Because bonds remain in this downtrend channel. Again, weekly, we've already talked about, I'm not going to beat this horse dead, okay? But we've been dropping on a weekly. That is an ugly chart. Why are you getting long bonds? Well, I'm not getting long necessarily, although I guess technically I'm selling naked puts way below support because while I don't think I would be buying bonds here, especially for the long term, I don't think it's going to go up and double its money in a year or two from here. I think there could be some more downside, but I think you're getting closer to a bottom on these bonds. I'm just not ready to signal go all in and dump the truck and buy, but I will be selling puts on any of these drops. Good drop today, significant drop on today's session. So I think it's a good opportunity to go out and buy some more, or I'm sorry, sell naked puts on ZB here. So that's how I'm going to keep playing it. We're going to just keep scalping through these little trades when we hit some newer lows, while everybody else is buying and loading up the boat on TLT and TMF and losing money. We're going to just keep selling puts at the lows, waiting for the little bounce. Okay, so I've got plenty of puts to sell you guys. You're welcome to buy those at any point in time. But I like the premium, and with bonds right now, you've got an IVR of 51. That's a pretty juicy volatility premium. So we sold some today. We're up 7% already on the day. So we're up 7%. I'll tell you, the people in TLT and TMF haven't seen a 7% up day in about 6 months. So I shouldn't say 6 months, but 6 weeks or so, 8 weeks, 10 weeks, 12 weeks. Okay, we're up 7% today. on selling puts in bonds. I'm not selling it in TLT. There's no premium there to do it. You got to use futures to do that. So that's some trades that we're putting on today. Just sharing with you a little bit about what we did on the session. But that's one of the trades that we put on today was a naked put in bonds. So take a look at that on this big down move today. I think it's a great time to get in. Again, we can still go lower, but I'm selling well below this channel that we have here. So we'll see what happens, but I think it's a good play overall. And then if we take a look at what's moving, and I added semiconductors. So I added the semiconductor ETF to this. And here's why. Because we're in AMD, we're in some others, and I want to track semiconductors a little separately because that's one of the areas that I think is always a bellwether to get an idea of what's happening in the market. Semiconductors, I said there was wedges everywhere. Here's another wedge pattern. Okay, so you got a wedge pattern in semiconductors, falling wedge, breaking out today, bumped up to it yesterday, breaking up here today. MACD moving higher, RSI moving higher. In fact, I know I've been adding these 50 lines. I'm going to do that here whenever I don't really have one. So here's the 50 RSI. And let's clean it up to exactly 50. Change the color and the width, and boom, there we go. So you broke through this a couple days ago. So this was your trigger right here, in my opinion. This would have been the trigger back here on the 9th to get long semis. Moved up, stalled out today, was higher, got to the top of the Bollinger Band, stalled out there, something to keep an eye on. But look at this Bollinger Band getting tight. This thing is getting tight, and it's ready to break one way or the other. If you had to guess, it's probably to the upside. We'll see what happens. We got to keep an eye on it. But I love this falling wedge, which is really a bullish pattern. If we get the breakout to the upside, I think we can run up here on semis. What else is moving? XLE is moving on the session. So it moved up fractionally today. XLK moved up fractionally today. Let's extend this out. And what do you see here when we're looking at technology? You ran to the top of this downtrend channel and you failed at it, which was also the Bollinger Band up there. Still strong MACD, still good RSI. So those things look good overall, but you failed at a pretty key area, in my opinion. So I think you have to really watch tech from here. I think it can still rip. I think you can still get higher on tech, potentially on this bounce. I don't know if this bounce is done. We looked back at SPY, and we looked at that trend when we looked at SPY. Okay, you can get all the way up to 445 and stay in this downtrend channel. So I think if you could fill this gap, you might move higher. But I think if you fill the gap, that gives you the reason to sell off. I think you want to fill the gap, and then we're going to sell off. But if you look at 445 from where we are here, 433. So 433 to 445, that's what, about 12 points, which is about 3% or so here. So I think you got about a 3% upside before you start to run into serious problems on SPY. The Qs, they're already there, ready to break out, which is what you're also seeing in techs. So I think you get a little bit more of a move in techs, maybe another 3-4%. Something like that in text before we essentially roll over and start to give it back. And I don't always draw charts kind of backwards this way, but I'm going to do that for here because it's a little easier to draw this one. That way, if you look at this as well too, what are you seeing? You're also seeing somewhat of a falling wedge, which could be a good bullish sign. Wedges everywhere. XOP was the other remaining small up sector today, up just fractionally, closed off its highs. And then you start to hit the negative sectors. XLF, least down. XLV, your healthcare, dropping today, dropping back, failing at the 50 and the 200, dropping back through. Healthcare not looking too good. Here's your industrials, failing at the 50, holding at the 21. Here's your consumer staples, just dropping like a rock. Consumer staples getting absolutely wrecked out there. XLY, your Amazon, your Teslas, this is your consumer discretionary. That's taking a little bit of a hit here. And then let's just skip down KRE. Here's your regional banks. Now, your regional banks are also in this triangle, tried to break out to the upside. And now we're going to see if this triangle actually becomes this falling wedge. If that becomes support and you can bounce off of it, not a great sign to see rates continuing to jump up there and bonds falling. That is not a good sign for banks. We need to see that reverse. We're going to find out tomorrow morning how some of the big guys are doing, JPM and some of the others. We'll see how those are doing. And then your worst performing sectors of the day right now, pharma just getting murdered on the session. This thing was oversold, tried to bounce, and then just got wrecked again. This is why you don't necessarily just play the dead cat bounce. This is what TLT could absolutely resemble. Okay, trying to bounce and then just failing here because the prevailing trend is down. As long as the prevailing trend is down, these are just little bounces in a downtrend, down 2.7% today. And then biotech, same type of thing, trying to bounce, getting wrecked here today, back to oversold levels. This thing's in a triangle pattern as well. So you can see that starting to form on the weekly or forming on the weekly. So you get the triangle pattern here on the weekly, but this one is probably more of a descending wedge pattern, but it broke through the bottom. So this is your descending triangle. All right, so there's your sectors. Quick look at some of the stocks today. Amazon up just fractionally, could not fill the gap on Amazon. Even though RSI and MACD are climbing, it looks decent, but couldn't fill the gap today. I'm a little concerned if it can't get any mojo going and fill that gap. We'll see where it can actually go to. Apple didn't perform great on the session, but it is also in this kind of a wedge pattern starting to form, and it's at the top of the wedge. Do we just turn and start to fall again and maybe have to make another run at it, or will it break through? Microsoft, kind of in a channel more than a wedge. They might be narrowing slightly, but this one's breaking out to the upside, looking decent there. Meta today took a little decent hit, but I mean, after this move from Meta from 301 to 330, I mean, that's a 10% move in 5 days. I'm okay if Meta drops 1% today. It's a good pullback. We have a trade on in Meta. We are up 32% in 3 days. Okay, so 32% in 3 days on Meta on a butterfly trade. Love where we are on this trade right now. So we'll see what happens on Meta. Google pulling back again today. Now this one is in a rising wedge pattern, okay, which means I would be much more inclined to see a downside break, and MACD one day doesn't do it, rolling over a tad here with RSI moving down. The weekly still solid to the uptrend, but this is definitely a rising wedge pattern, which can be bearish. All right, let's take a look at NVIDIA. Where are you on NVIDIA? We just remain in this nice channel that we've been moving at sideways, moving to the top of that channel. Bollinger Band starting to expand. So you've got earnings coming up, but I think NVIDIA making a little bit of a nice run here. Tesla getting beat up a little bit today. This one is in a pretty much a symmetrical triangle pattern, not really a rising or falling wedge. It just couldn't break it here. So this is getting really, really tight. Tesla getting ready for a move one way or the other. The only thing that would make me concerned here, well, not the only thing, is an RSI can't seem to get the mojo running, and MACD is starting to flip over. If this thing breaks below the 50, starts to head low, if we get another down day in Tesla tomorrow and we break the 21 and or the 50, got some concerns. And we're already down 1.5 points, almost 2 points in after hours. So you're down to 257. We close at 258.87. So you're down almost 2 points. It's after hours. We'll deal with it tomorrow, but I would be concerned there. And then our AMD that we're in, this was another one of those wedge patterns that we broke out to the upside. We're in this thing, this AMD trade, 3 days in, we are up 30%, and we have a put credit spread with the naked or the short puts underneath this 3 ATR area here. So I like where we are in this particular trade. It broke out, took a little breather yesterday and today. Let's see what happens tomorrow in it. But this one is maybe down fractionally. Some sideways movement. It's totally fine with us. Just I would have liked to have seen RSI continue its run. It's starting to wimp out, as well as MACD here, even though the weekly looks decent. If we take a look at Qualcomm, another triangle pattern trying to break to the upside. So we'll keep an eye on Qualcomm here. MACD, though, RSI not performing great on there. If there's some charts you guys want me to take a look at too, go ahead and post those into YouTube comments, and I'll try to take a look at that. And then SoFi, those of you that have known me for years and years and years and years know I do not like SoFi. I didn't like it. Yeah, that was maybe interesting at 4. Didn't like it at 24. Didn't like it at 20. Didn't like it at 15, 14, 12, 10. Okay, and now you're back down to 8. So this thing moves around. I don't really know what is going on with this company. I know there's people that love this thing. I think it sucks. But if you like playing the 4 to 8 move, okay, great. And then you can play the 8 back to 4 move and keep making money. But this is a descending wedge that you're breaking out to the upside on. So another wedge pattern, breaking above on RSI and MACD, moving higher, trying to get the weekly to reverse a bit. RSI starting to tick back up. Decent move to the upside on SoFi. You've got earnings on 10/30. So you've got earnings 18 days away, almost 3 weeks. What kind of a move can we get in the next 3 weeks on this? I think this is an interesting looking chart to the upside. I think I could consider selling puts here, maybe somewhere down below this, maybe in the 6.5 range. In fact, let's take a quick look at those. If we were to sell some naked puts prior to earnings or right around earnings, you know what, let's just look at the 27th. Trying to sell, what did I say, the 6.5s or so. There's just nothing there. There's no premium. No premium in this thing at all. Around that mark, you'd have to be around the 7 range, which is down in here. Still, maybe that's not terrible. It's a little more risky than I would like. But maybe you pick up a few points in this thing. But I don't really love what I've seen as far as SoFi. Despite the IVR on it, it's just not a good trade. I just don't really know where you're going to get any premium trying to trade this thing before earnings. Okay, so there's where we are in the market. Let's just jump quickly into the account, show you what we did today. And on the session, we finished with another low recently on our deltas, down to 239.08%. Fantastic deltas that we have there. Love the fact that we're very delta neutral on this 1365. So good theta overall, 0.46. Loving the fact that we're hanging around the 0.4 range. We might be a little heavy on theta, but it's okay. But we moved up fractionally on the account today. So the account moved up a bit today on the session. So we are back to the highest point that we've been in weeks. Again, we are just off. We are within striking distance of a new all-time high in this account. We're up on the month now as far as net lit goes. BP usage 216.032. We did add some trades today. I talked about the fact that we added a naked put on ZB. We also added a naked put on oil, and we added a put debit spread in ES. Not necessarily legging into a BA or the big ass 112, but that's the plan, was to leg into it today. We'll see if the markets drop tomorrow, then maybe we'll add that naked put in the next couple sessions or so. If not, it's traded by itself as a hedge. If we drop decently and that hedge starts to pay, I may add a naked put to it on a drop there, or just let that hedge go. Just let the PDS go and catch something in the trap. All right. So there's where we are, 72% BP usage, and then 1375. So another winning day in the markets for us. And overall, here's what we did. We closed a strangle on ES today. So we had an ES strangle close, 50% winner, 11.25 in cash, 16.2% in 42 days. Fantastic return on margin on that. So another strangle winner in ES. And then on gold, we closed that naked put. We've been playing those bounces in gold. Lows, sell the naked put, close it for the high. We closed this one for a 50% winner in just 3 days. Took in $250 on this. We're just playing those moves, and they're generating cash while our 112s and our strangles are our big enchiladas delivering cash. We've got some 112s getting ready to hit for the month, so I'm excited for that. Hopefully, adding about another $4,000 in P&L in the next week or so. That way, and if we get a couple more strangles, adding another $2-3 worth of strangle money. So 2 nice winners on the day. If we look at the small account, that small account moved up. It is just a hair, $100 away from a new all-time high there. So our small account that we started at $10,000 is up right now to $14,674, doing fantastic. It's up nicely all the way around. In fact, I think we got to probably adjust this one, 74. Right, so we're up 2% on the month as far as the net lick goes. We haven't closed anything. We don't do a ton of trading in there. We let those ES 112 or we let the 112 MES 112 trades rock and roll, and we have a few really low delta strangles and a few other trades to juice the return in that a fraction as we let this go, but not too bad. Would you like to make $4,000 on your $10,000 account in 10, 12 months? Not too shabby. Nice 46% return. We'll take it. And then here's the IRA. So the IRA, another new all-time high today. This IRA is up. It's actually up 37,000 on the year because we took a $10,000 distribution, but it's still at a new all-time high, higher than it was before the distribution. We've already made that $10,000 back quickly. That distribution was back here on 8/31. So in just a month and a half, we made all that $10,000 minimum required distribution. We made all of that back and then some. So we're sitting at new highs. When we closed that out, we were at 221. So we've not only made that money back, but we've added another $6,000 on top of that. But you're up about $37,000 on the year. So we're up almost 19% in the IRA, and it's only October. Let's see how we do the remainder of the year. But I think most people will take an 18% to 20% IRA return in kind of a tough year, in my opinion, to trade. It's been an interesting year. All right, so there's where we are. Great day today in the accounts. We added some new trades. If you like this, click the like button. Please subscribe. Join us in the Discord. See exactly what trades we're putting on. See what trades Igor and Gabe are putting on. See all of the different trades from our traders. Dozens and dozens of trades a day happening. People hitting all-time highs. Great stuff. If you haven't joined us, come and check it out. See what we're doing in the Discord. I guarantee you're going to get some money made if you stick with it long term. Okay, can't trade for you. Okay, but you're going to get enough ideas, I think, to make that investment back, and make the investment in yourself to learn something new. Make the investment in yourself to learn how to trade and manage your portfolios properly. And who knows, might get lucky and make some significant money out there. If not, you're going to have a nice stable portfolio that's going to make you money while you work and generate additional income. So we'll see you guys later. Take care. Enjoy the rest of your day. Enjoy your evening. Stay safe out there, everybody. Be careful tomorrow and take care. Bye-bye.